Thank you, everybody, for being here today. My name is Cherish Dela Cruz, and I am the owner of Dela Cruz Law. I have an estate planning and business succession planning law firm. I also deal a lot with small businesses. I'm happy to have this presentation today with some of my trusted friends and part of my trusted network. I thought it was important to do because I know that there's a lot of anxiety for small business owners right now. They are concerned about making payroll. They're concerned about the future of their business. And I know that these loans through the SBA will provide a resource for them to continue their business. Today, I have here with me Albert Assad, and he's going to tell about a little bit about his background. He's with Atlanta Consulting Solutions. We also have David Verdugo with Bank of the Ozarks and Corey Thrasher with Starfield and Smith. The idea today and the goal is to give you a roadmap as to where we were before this crisis happened and where we are going. We won't have exactly all of the details and answers that you may be looking for today. Everything right now is currently what we would deem as fluid. And so things are changing moment from moment. And we want you to understand that both as a business owner and if you are a resource to other business owners. So thank you today for being here, and we hope that this will provide a good resource for you. Albert, do you want to give a little bit about your background?
Sure. Hi, everybody. Hope everyone's doing well within these current circumstances. I'm going a little crazy being stuck at home. I'm usually on the road visiting my clients. So I'm a management consultant, primarily focused on working with small, medium-sized businesses in the Metro Atlanta area. We do have clients in other countries as well, but we try to focus local because we want to be able to meet with our clients on a regular basis, most of the time in person, to help them with their business. So we primarily help them with strategic aspects of their business, helping them with management improvement as well so they can continue to grow, and financial aspects where we can help them to implement financial strategies to improve cash flow position, etc. I work with a variety of industries. We've worked with over 32 different industries in the Atlanta area. So we primarily focus on working with business owners to help them to continue to grow their businesses and to make their vision a reality.
Thank you, Albert. David, can you introduce yourself to the audience?
Sure. So good afternoon, everyone. My name is David Verdugo. I'm a senior commercial banker. Can everyone hear me?
Yes.
Yes? Okay. I'm a senior commercial banker at Bank OCK. I primarily deal with mid-sized companies, and we usually define that as companies that do anywhere between $3 up to $300 million in sales. We understand that everyone is a little anxious with everything that's going on right now, and hopefully today we'll be able to provide you guys with a roadmap and answer some of the questions that you may have about some of the tools that are available to you at this moment. I've been in the industry for 22 years. Used to work for JP Morgan Chase before joining Bank OCK. Prior to that, I was with Wells Fargo / Wachovia. And before that, I was with State Farm. So I have a well-round amount of knowledge when it comes to helping clients both on the personal and the business side.
Thank you, David. Corey, can you make your introduction?
Sure. Good afternoon. This is Corey Thrasher with Starfield and Smith. I'm primarily a commercial real estate attorney. Our firm is one of the premier compliance and guidance sort of for SBA lenders, and I do a lot of small business representation as well. So when the stimulus program came online on Friday, when the act was issued, we sort of, sprang into action along with everyone else, and are just hoping to help everyone navigate the stimulus program in light of the sort of unprecedented pandemic that we're seeing right now.
Thanks, Corey. And Albert's going to be kicking off our presentation.
Hey, everybody. Well, let's, I know time is limited here, so I want to be respectful of that. So let's dive into this. So just, I think the first thing that's important for all of you to understand is that everyone knows these are tough times, right? We're all going through it. We're all going through this together. I've been talking to a lot of different bankers, and David is one of them, and also with other consultants and economists, and everyone is a little antsy because no one really knows exactly what's going on, how long this is going to last for. And so that creates a lot of uneasiness with a lot of us, right? There's a lot of macroeconomic factors that are influencing the decisions that we have to make for our small businesses. The good thing is that the government is aware of this. And so the government is helping us. If you all remember, a lot of people were complaining that back in 2008, during the crisis, the ones that got bailed out were the large companies, right? And banks and everybody except the little guy, right? Well, this is our turn, right? We are receiving direct support from the government to help us to continue operating during this unprecedented time in the history of the United States, right? Not even during World War II did something like this happen. So yes, there is uncertainty, but we have help and there are ways of getting out of this and moving forward with the company. And that's what we're going to talk about today, right? So we will be talking primarily about two different types of supports that the government is currently offering to small businesses. We will be talking about one, which is the EIDL. We'll get into what all that means, and the CARES Act, which I'm sure a lot of you have already heard of. So as you see in this first slide, what we'll be doing is we'll be moving from the CARES Act and explaining what each one of those programs consists of and how those programs can help you, right? So all of this is taking place through the SBA, right? And through the Treasury Department. And so they are injecting $2 trillion to begin, because apparently there's also other tools that will be available to us depending on how long this prolongs. And but with $2 trillion of support, that will be helping all of us. And we'll get into the details of how all of that is going to help each one of you. Some of these will be in forms of loans, and some of them will be in forms of grants, or would be a forgiveness program, which essentially means that it would be as a grant. So with that, let's dive into the next slide. Let me see. Okay. I'm not seeing. Okay, perfect. So let's talk first of all of the one of the first two programs, right, which is the Economic Injury Disaster Loan Program. So what is this program, right? This program was enacted by the Coronavirus Preparedness and Response Supplemental Appropriations Act that was signed into law by President Trump back in March 5th. So this program has been around already for several weeks. I hope all of you have already taken advantage of it and are applying it. In case you haven't, we will describe what it is, what it consists of right now. So the first thing is that this is a low interest federal loan program for working capital to small businesses that are suffering substantially from the economic injury as a result of the coronavirus, right? Also known as COVID-19. So the purpose of this program is to provide vital economic support to small businesses to help overcome the temporary loss of revenue they have experienced, right? So this program applies for current and future disasters caused by COVID-19. So it will probably be around for a while. So what I'm going to do is I'm going to talk about the program EIDL and the EIDL Advance, right? So this is actually within the same program, but there is a portion of it that can be advanced to you in a very quick turnaround time. So let's go piece by piece, right? First of all, who's eligible for this? Basically all small business owners, right? As long as you're within the United States, as long as or Washington, D.C. area and its territories, you will be eligible for this, right? Yes, this includes sole proprietorships, LLCs, all type, corporations, and private non-profit organizations, amongst other entities. So basically, almost anybody that has less than 500 employees, we could say would almost apply for this. How can you apply for it? Well, first of all, it's all done online, and it's actually a very easy process, right? It's a 5-step process. It shouldn't take you more than 15, 20 minutes if you go really slow. And you can go directly to the SBA and you can find it there, right? This program is offered directly by the SBA. So if you want to log in, you could just type into your browser covid19relief.sba.gov, and it'll take you directly to the application form. Again, it's just a 5-step process, very easy. How long does the process take? Well, once you've applied, it could take up to 20+ days for it to be completely approved, right? They will require at some point some documentation. So after you've applied, you will probably receive some sort of communication from the SBA asking you for some additional documents. Before, there were some, there was a different application form, so that was a little bit more complex. Right now, what you'll see is a very easy one that will take you through this whole process. Now, there is I guess a good portion of this that even though it might take up to 20 days for you to get approved through the whole process, if you apply, you will get a $10,000 upfront payment within 3 days after you've applied, if you pass through the initial approval application. So you should be able to see money deposited directly into your business account within just a few days. So this is a help that the government wants to make sure they're injecting capital into the market to help provide liquidity for businesses so they can continue to operate. How much can you obtain from this? What you will obtain is up to $2 million in assistance, but obviously that will be determined by how much you've been impacted by this situation, and therefore the amounts will obviously vary depending on what your real needs are and your capabilities. How can you use this loan, right? So this loan may be used primarily to pay such things as fixed debt, payroll, accounts payable, and other bills that can be paid because of the disaster impact, right? It's not intended to replace lost sales or revenue. So be careful about how you use it. Make sure you try to stick to the guidelines that are provided so that you don't have any issues afterwards. Will you need to provide collateral or guarantees? Well, from all the information that I've been seeing, it seems that for loans under $25,000, you will not need to require or to provide either a collateral or guarantees. If you do need more than $25,000, then you will probably need to provide personal guarantees and collateral. There is the exception, though, that with that $10,000 advance that I mentioned, they won't require any type of personal guarantees or collateral, right? Just so you know. What are the terms on this? The terms are that you have long-term repayments, right? This is a long-term repayment vehicle. So they want to make it as affordable as possible for you to make the payments. So they want to make sure that you have as much time to pay, right? So the maximum is 30 years, but it will be determined on a case-per-case basis, depending on the borrower's ability to repay, okay? And then I think lastly, what is the cost of this, right? So the cost is that this is gonna have an interest rate of 3.75% for small businesses and 2.75 for nonprofits, right? So this is not a grant, right? It must be paid back. There are no other costs associated with this. However, the first $10,000 advance that I mentioned will not have to be repaid since it will be eligible to be part of the forgiveness program that is the Paycheck Protection Program, which is the PPP, that is part of the CARES Act that was approved about a week or so ago. So what you see on the slide, that is the process for the $10,000 advance. I just gave you the information for the entire program for the EIDL itself so that you know exactly what you're getting into. And you don't need to accept it even if you are approved, right? But if you apply for it and you need it, this is very helpful. Plus, I can guarantee you, and David can confirm this as a banker, that you will be very hard pressed to find a 3.7 to 5% interest rate on any type of loan for a small business. So if you can take advantage of this, please do so. This will be a great help for your business.
Thanks, Albert. Corey? Oh, you want to? Can you see your screen?
I can see the screen.
Okay, great.
Okay, perfect. So thank you, Albert, for that summary of the Economic Injury Disaster Loan Program. I know that everybody's been talking about, the Paycheck Protection Program, which is authorized under the CARES Act, which was signed just last Friday, I guess. And Cherish, if you want to go ahead and move to the next slide. But basically, PPP is an expansion of the SBA 7A loan program, and they're authorizing up to $349 billion to be used as stimulus payments to assist small businesses under this program. Now, you can see the types of businesses that are eligible for these loans on this slide, but basically they're targeting your typical small business with fewer than 500 employees. Some industries, such as hospitality, where you might have a hotel or a restaurant chain, there are exceptions and there are other rules that apply. I'm not going to get into that today. And there's still a lot of questions that may not be answered by the current guidance that we have. This is changing on a daily basis. In addition to that, sole proprietors, independent contractors, and self-employed individuals, so long as they can show the appropriate documentation of their own payroll, will also be eligible to apply for these loans. And Cherish, if you can go ahead and bump it to the next slide. Okay, so everybody wants to know, what am I eligible for? Well, so far we know that the loan amount can be up to 2.5 times your average monthly payroll cost of the small business from the prior year, or for certain seasonal businesses for a certain time period from 2019. And if your business has not been in operation for a full year, there's a different window for calculating payroll costs. I believe it dates from the beginning of January of this year through March. Now, that amount is capped at $10 million, and payroll costs are also capped at $100,000 annualized for each employee, meaning that your highly compensated employees are not going to be eligible for more than $100,000. And I think it's important to note that there are still some questions outstanding with regard to payroll cost per employee, because you may have somebody who has a salary greater than $100,000, but what if you have an employee whose salary is $90,000, but when you add in their benefits, their health insurance and things like that, you bump up over $100,000. Is that also excluded? So we're still waiting on some additional guidance with regard to that calculation. And Cherish, you can advance to the next slide. Yes, David.
Let me jump in on that, because we're talking about payroll cost and it being capped up to $100,000. And so when most of us think about payroll costs, we're just thinking about the salary that's being paid to the employees. But what's embedded into that payroll calculation, or the payroll cost calculation, is salaries, wages, commissions, any tips, anything that's being paid towards vacation, medical leave, sick leave, health insurance. All those things are actually taken into account as far as that payroll calculation. Now, there are a couple of things that are excluded from it, and that's basically your federal employee, your federal insurance contribution taxes, or FICA. And so those actually need to be backed out of that overall calculation. And so I'll turn that over back to you, Corey.
Sure, thank you, David. And Cherish, you can advance us one on this. Thank you. And here's kind of what David and I were going into as far as the items that you can include under your payroll calculation. And this does include like your group healthcare benefits, retirement contributions, and possibly state and local taxes on that employee's income, in addition to your typical salaries, wages, cash tips, and payments for family and medical leave. There are certain exclusions based on whether or not you're going to take advantage of some of the tax credit provisions that are also laid out in the CARES Act. So, you know, while we don't know very much at this time, if you're a small business, you want to continue to work closely with your accountant to see if it makes more sense for you to take advantage of the credits than it does to actually include these costs in a PPP loan. And then, of course, for sole proprietors and independent contractors, you've got your wages and net earnings for self-employment. Allowable uses. So you can use the PPP loan proceeds for payroll costs, group healthcare costs, salaries, commissions, interest on any mortgage obligations with regard to the business property, rent obligations, utilities, and interest on other debts incurred prior to February 15th of this year. There's also no guarantee, no personal guarantee required, and no collateral required for these loans, which is you know, a pretty big departure for what you have on a traditional 7A loan. All right, terms. So the Act itself laid out a higher interest rate, and then I believe the initial Treasury guidance brought it in at 0.5% interest rate. As of last night, it's now at 1.0% fixed. All loan payments can be deferred for 6 months. I believe there's an additional option for lenders to extend for an additional 6 months after that. Interest will accrue over that deferment period, but at a very low 1% interest rate. Now, you know, maturity would be 2 years. And I think the Act specifies 10 years, but they've shortened that to 2. And there won't be any borrower, lender, or prepayment fees, which is also a significant departure from the 7A program. The big ticket item is forgiveness and what portion of this loan is eligible for forgiveness. Basically, the covered amounts that are spent during the 8-week period after the loan origination will be forgiven for the following, and that's your covered payroll costs, subject to a $100,000 cap on employee compensation, interest on the covered mortgage obligations incurred before February 15th, and the covered rent and utility payments. The big picture here is that the government wants small businesses to retain their headcount, you know, and rehire or retain workers for as long as they can. So if you're reducing your headcount or reducing salaries, then your forgiveness is going to be reduced accordingly. Another thing that came out in the guidance from over the past couple of days is that at least 75% of the forgiven amount really must have been used for payroll costs. So you're not going to be able to cover, you know, use 90% of the loan proceeds to cover your rent payment, you know, and the other 10% to cover payroll. It's really designed for worker retention. And I believe there will be more guidance forthcoming on that as well.
So one question that comes up, especially as we're having conversations with a lot of our clients is, so what if I had to lay off employees, or what happens if I had to furlough my employees? And so our understanding right now, and as Cherish and Corey mentioned in the past, a lot of this is very fluid. And so there's been constant updates and constant changes, but our understanding right now is that you have until June 30th to restore your full-time employment and salary levels for any changes that you made between February the 15th and April 26th in order for you to be able to qualify for the forgiveness portion of this program.
That's a very good point. And the small businesses are asking, you know, what do we need to gather together? And I think everybody agrees that most importantly, you know, you want to try to have your documentation in order. You're going to have to submit documentation of payroll, evidence of your rent, utilities, and interest obligations. obviously your corporate organizational documents, your EIN, you know, sort of the general items you would need for any sort of loan processing.
Thank you, Corey.
I'll say this as well, and Cherish, if you could go back to that. So, you know, evidence of employment is going to be key. Have a conversation with your payroll company or your CPA as to what information you could provide the banks in order for them to feel comfortable with the information that's being provided to them. So we can make a good determination as to what amounts of payroll would actually qualify for that. Aside from it, and this is still up for discussion and it's still up for debate, as you, most of you may be aware of, there's a couple of things that banks have to do. There are federal regulations that restrict banks on being able to open up accounts or doing businesses with individuals that potentially don't qualify to have an account here in the United States. And so what we have to do is we have to do something called KYC, which is basically getting a good understanding as to what the ownership of your company is, who the right person inside that company is allowed to engage in any kind of contracts and sign for any type of loans that you may be getting. And so you may be you may need to reach out to your attorney, the person that put your paperwork together for the filing of your corporation or your LLC, to get copies of those documents so that you can provide that information over to your bank as well. So how and when to apply? So that, I guess that's my turn. Currently, as starting today, small business and sole proprietorships can apply and receive loans to cover their payroll. That again is something that there's a few banks, including us, Bank OCK, that are delaying the start of the application process because there's still some information that needs to be clarified by the SBA. So as of this afternoon, there's a couple of banks that haven't started processing applications. We're anticipating that a lot of these is going to be mitigated between now and the end of today, and that you'll see communications coming out from all your banks in regards to how to go about applying for this loan. One thing to keep in mind is that because of the high demand for this particular product, what banks are trying to do is they're trying to limit the number of people that are going to be gathering this information, and more than likely they're going to ask you to go online and process the applications themselves, so that in turn we can have the bankers and the underwriters and the credit processors just gather all the information, make sure that you process everything correctly, and then go through the process of actually distributing the funds. So take your time to go over the information that's going to be made available to you. Make sure that you understand the terminology, make sure that you understand what's being asked of you, so that when you're filling out the applications, you're putting all the details in there the right way. If you have any questions, you know, Corey, Cherish, Albert, and I could be great resources, and we'll be providing those details to you guys at the end of the call, so that we can kind of help out with some of those. Starting April 10th, independent contractors and self-employed individuals can apply and receive access to these funds as well.
So, David, from a practical standpoint, because I've been having discussions with my network, my clients, friends, you know, who are small business owners, and there's a lot of, I wouldn't say hysteria, but just confusion. And so, you know, that given, is it, and what I want to educate the audience and the people who are watching, who may be watching this recording, if they go to their bank and their bank says, I am not ready or I do not have I don't have the paperwork available. Is it that particular bank's issue, or is this an overall arching theme that we're seeing with everyone? Because there is a lot of confusion. You know, we've got this date of this drop dead date of 4/3/20. So, you know, it was anticipated that at 7:30 in the morning or at 9 o'clock when the banks opened, that they could go to the bank, and, you know, a bank such as yours, and they would knock on the door and we could fill this out together. And so I'm feeling I'm hearing a lot about unrest from clients, and they want to get this done, and it's a rush to the bank, and that there's no money, there's going to be no money left. So can you shed some light on that for me?
Sure. So you bring up some really good points. There's definitely a lot of anxiety, especially, you know, given the fact that the dollar amount allocated towards this program was $349 billion. Just to put it in context, and I'm not an expert on this field whatsoever, but, you know, the U.S. population is 350 million roughly. So if you divide that by the number of by the number of dollars that were allocated towards this program, that basically mean that every U.S. citizen would get about $1,000 in their pocket. Now, obviously, there's corporations, there's entities that have been able to continue to operate, that have actually seen an increase in the number of employees that they're having to hire in order for them to continue to serve their clients. And so, is there a limited number of funds available on the program? Yes. Is it one of those things where if you don't apply today, you're going to possibly miss out on your opportunity to be able to access those funds? I doubt it. It is a concern, but I don't think it's going to be that much mass rush. Otherwise, I don't see why we would have put two different dates as far as applying on April the 3rd for companies, and then on April 10th for individuals. So I think that, you know, we all need to kind of remain calm. We know that there's a lot of anxiety out there, but we just have to take it one step at a time.
Great, thank you. Corey, do you want to talk about this page, what they must disclose, or David?
So let's see, I'll grab that one. So must disclose 20% or more owners of business. So this kind of goes back to the KYC and beneficial ownership information that must be provided to the banks. And so anyone that owns more than 20% of your business, the bank and the SBA is going to require that you disclose their level of ownership in that company. As Corey mentioned at the beginning, they're not asking because they're wanting for you to guarantee the loan. Is more from a know your client perspective. So there is no personal guarantees, and there is no collateral that's being asked for these loans. As far as affiliates of business, 50% or more owner of both companies, kind of very similar to what I just mentioned a second ago. There are certain rules when you're going through the process of applying for an SBA loan, and there are certain test standards that currently are actually not being applied to this program. So if you have any additional questions when it comes to that, just let us know. We'll be happy to address those here after the call. This next part is regarding fees. So just be mindful that, you know, to go through this process, the SBA and the banks are trying to make it really easy for you to apply. There's not a lot of involvement, or we believe that there's not going to be a lot of involvement when it comes to going through this process. But there is the possibility out there for you to hire a broker or an agent to help you through this process. And so the SBA has set limits on the amount of money that is going to be paid for doing these loans. And so those limits vary or depend on the actual size of the deal. The fees are actually going to be paid directly by the bank. They're not going to be paid out of the proceeds of the funds that you're going to receive. But basically what would end up happening is that, let's say the fee is 1%, or the overall fee is 3%, then 1% would go towards that broker or agent, and then the bank would retain 2%. Going back to that other point, lenders are not charging SBA fees and cannot collect any fees from the applicant. So you're not going to have to pay anything for processing this application.
And I think that is a key note that we need to understand, because there are some small business owners are more sophisticated than others. And this program is supposed to be, or the intended consequences of this program are that some of these small business owners who aren't as sophisticated, you know, this could be something as a potential opportunity for fraud, or, you know, somebody double dipping in the sense, or exploiting potential small business owners. And I want to highlight this for the small business owners out there. You know, they can't collect any fees from you in that sense. Now, if we go to the next page, there are people who can be agents, such as attorneys, accountants, and consultants, and someone who prepares, you know, the application for financial assistance. And there can be loan brokers, but just making your if you are a referral source, or if you are helping clients, making the general public aware of that fact, I think, is key.
Right. And so I'll go over the fees. So it's 5% for loans of not more than $350,000, is 3% for loans between $350,000 and $2 million, and then 1% for loans of that are greater than $2 million. So in my example, about that $350,000 loan or less, which is 5%, then those agent fees would actually be shared between the bank and the actual agent itself.
Great, thank you. And then, you know, just looking forward, now that we've got a background as to, you know, what this roadmap may entail, you know, we really want to highlight the fact that this situation is fluid, and that right now, you know, the regs may be changing. So we want to keep you abreast of what's happening. So this, you know, this is only part one of possibly a part 2 or part 3 series. And we want to keep you informed, and we want to make sure that we're resources for you. So given that nature, we also want to, you know, make recommendations of what you can do now. And Albert's going to go ahead and do that.
Before we jump into that, I saw a question on the chat about independent contractors, and I just want to address that because it's come up a lot with some of my other clients. So if you have a company and you use independent contractors, do independent contractors count as employees for the purposes of the PPP program? And the answer to that question is no, they do not. Independent contractors have the ability to apply for the PPP program on their own, so they don't count for the purposes of borrowing for this program. Just wanted to make sure that I addressed that.
Great.
Yeah, that's a very good point. Thanks, David. Okay, so we've talked about the 2 programs that are available for you right now, right? The Economic Injury Disaster Loan Program and the Paycheck Protection Program, which you can definitely take advantage of. So as Cherish was saying, well, okay, now that we have these 2 programs that can help me deal with all of these, you know, economic factors that I have no control over, which are impacting my business, which the government's helping me with. Well, what can I do to focus on the things that I can control over, right? The ones I do have that influence over. So in business, we talk about being proactive versus reactive, right? And because this came out of nowhere, we've had to be somewhat reactive. Well, let's try to make sure that we are proactively reactive, if you want to call it that, right? So I'm going to talk about 5 different steps that can help you manage your way through, these very challenging times, which is, let's call it what it is, right? It is a very challenging time for everybody. So the first thing I'd like to talk about is, I always like to begin on the human side of things, right? Before we get into the business stuff, right? A lot of you are business owners, not all. So you have to stay level-headed and keep working, right? There's nothing else we can do. We got to keep going forward, or as the British would say, right? Stay calm and carry on, right? Well, they were getting bombarded in World War II. So that's kind of what we're talking, that's what's kind of happening to us right now. We are getting bombarded economically speaking. And so we have to just carry on. That is a very important characteristic for a successful owner, right? For any CEO really, in managing your own emotions, right? And be careful, because especially if you have employees, and even if you don't, and your family will see this, your reactions really affect them. And if they see that you are more composed, their reactions will also mimic what you are expressing to them. So if you're still operating, make sure that you are, even though yes, there are concerns, and we're not going to act like there aren't any, but we're going to face them with intelligently and as much as we can, right? Because some businesses are in different situations, so you will be affected in different ways, right? The important thing is don't let emotions control, and do not make emotional decisions, right? That will be very bad for your business. Keep your ear to the ground, right? Because grassroots is a great indicator of exactly what's going on. So collaborate a lot with people, right? Talk things through with a trusted advisor, right? Those are super important, because you don't know it all. No one knows it all. And the more we talk with each other, the more information we all get, and we're able to make better decisions. And then, don't focus on what you can't control. Sometimes business owners will call me. They're like, oh my God, what's going on? And I'm like, if I would have done this, don't waste your time. You didn't do it. It didn't happen. No one knew. Let's just keep going forward. So that's the first thing. The second thing that I would recommend is manage profitability, right? Most companies, especially small businesses, have a relatively narrow margin of error. And if you have a 10% decline in revenue, that's probably wiping out most of your bottom line. And so a lot of people are talking, they're not even talking about thriving, they're talking about surviving, right? Survive versus thrive in this environment. Don't completely agree with that. Depends on your circumstances, but there is a certain truth to that. So yes, focus on profitability, right? And especially if you're staying at home, now's the time to plan, right? So how can you manage profitability? Well, you have to develop a contingency plan. That's focused on producing marginal short-term profit, right? Despite the drop in revenue, you have to make sure that you are viewing that as a hawk. And I'm not talking about waiting until the end of the month until you finish your monthly report. You got to be doing this on a daily basis, right? This report has to, this plan has to have milestones that indicate what actions you're going to take at each moment. For example, if your sales pipeline is slowing down, right? If you're shrinking your backlog, well, all of these are indicators that, I'm going to have to react. And depending on how far they go down, then I know I need to focus on this, right? With these programs, we don't have to let any people go, hopefully, right? So that's not one of the options, but there are other options, right? Some other options are, for example, if I have less sales, well, I should be buying less inventory, right? You might still need inventory, but you don't need as much. So viewing those things, right? You have to develop a revenue forecast, right? A lot of people immediately go to cut costs. Yes, if you're in a real crisis, definitely. But methodically, I always like to begin first on looking at what your forecast is. I will tell you, some of my clients are doing extremely well right now. And so it wouldn't make sense for them just to go and cut costs just to cut costs, because that will hurt their ability to continue to generate revenue. So be careful about that, right? Focus first before you get to the cost part. We'll get there. But first focus on, what does my forecast look like? How are my revenues slowing down? And as they slow down, then I need to make certain actions, and we'll get to the budget part of what we need to cut. But right now, focusing on your revenue forecast is really important. right? What can you provide? Can you provide terms to your customers? Can you renegotiate credit lines or debt lines or things like that that will help to reduce your costs from that perspective, but really focusing more on your clients. So that's the second one, right? The third one is focus on your strengths. Believe me, times of crisis reveal who you truly are. And you have to be faithful to your competitive advantage, to your identity, right? Think about what has made you successful up to now and what hasn't, and what is peripheral. And you might need to, eliminate some of those peripheral things and really focus on what has made you successful so that you can continuously serve your clients effectively. And that's the part that is extremely important for your success. And along with this is identify who your highest margin customers are, because you need to protect those relationships, communicate with them, find creative ways of continuing to service them, whether it's providing a more comprehensive service, whether it's, sending them additional information they need, calling them. Those are all different items that you can do, but you need to find ways to add value so that they do not stop buying from you as much as you possibly can, right? That's really, really important. The fourth thing that I would recommend is be ready to decide what you can stop doing. Sometimes it's difficult, and this is the part where after you've done all of these items I've mentioned before, then you look at your budget and you're like, okay, what can I cut out? Now that I know how much revenue I'm expecting to come in, what can I do without, right? What no longer adds value to what I'm doing? So you can ask yourself questions like, identify what's inefficient, what's nice to have but is dispensable. What's there because of history and because of inertia and because I've always done these things, or because I wish I could have done these things. And so I have all these extra costs that I could eliminate, right? What may have worked in the past but no longer works now? What isn't increasing value to my clients that I'm doing or I used to do? All of the answers to all of those questions will help you to figure out what you can eliminate and what you actually still need to have, right? And then once you've answered all this, then you can recalculate your budget for the rest of the year. And now you know how much you can and cannot spend. And again, as you're adjusting your forecast continuously, you can readjust that budget as well, right? But it should always be proportional so you can make sure you can still do business, right? You still need to continue to do business as much as you can. The fifth one is manage liquidity as hard as profitability, right? You've all heard the term, right? Cash is king, right? Trying to maintain liquidity on smaller revenue base can be crippling for a lot of companies. So you'll need to lead with the right proportions of cost and conscious frugality, right? And bold innovation, right? That's going to be a balance that you need to continuously make during this time. So yes, you need during these times to think more than in good times. In good times, we just let ourselves get caught up by the whirlwind of activities because business is coming in and I'm making money. So as long as money's flowing through, everything's okay. But when money isn't flowing through anymore, then you need to think more on how you can really leverage what you have. So you need to turn every dollar in faster so you can continue to contribute to your working capital, right? So, narrow the timing between sales and advanced costs that are incurred. So for example, inventory, right? Try to reduce that time. How quickly can I get the payment in and how late can I pay my vendors so that I can get that product or whatever I'm offering as quickly as possible so the money can come in as quickly as possible as well and bridge that gap, right? Collect from your customers faster, right? Consider offering maybe discounts so you can get paid more promptly. Require deposits up front, right? I have a client right now that is doing extremely well and they've run out of product and they're not in a necessarily good financial position. So I told them, I said, look, you need to ask people to pay you up front. If they pay you up front, then you can offer the product. And they were afraid of doing it. They started doing it. They've had no problems, actually. Everybody is paying up front, apparently, at least thus far. So it's worked out for them. And it's actually leaving them in an even better situation than they were before. right? Take advantage of suppliers that are willing to give you favorable terms, because they will be, they also need to sell. Monitor your receivables against your payables continuously, so you can reduce that cash conversion cycle of days as much as you possibly can. That will help you. You can also leverage your lines of credit if you have any currently, and your credit cards, right? So you can bump out artificially the payments due 2-3 months down the road, and that will help you a lot to get through these moments. And then if you get these payments from the government that through these programs, that will also add a lot of help, right? Move your customers from from checks to ACH, right? For example, that'll help you to speed up payments, because you got to wait for the check to get to you, or you got to go get it, which is a cost there as well. So you can speed up by 7 days just by doing that, getting your payments in the doors. And then obviously talk to your lenders and your leasers, right? Bankers, vehicles, equipment, et cetera, to push out payments as much as you can. And hopefully, and actually many of them are already offering some extension programs. Lastly, be ready to shrink to survive, okay? It's okay. Yes, it's scary. Yes, it's gonna hurt, believe me, but you will get through this, right? We have the support from the government. If you're being smart about this, unless you're in a very precarious situation, you might need to be more aggressive, but as long as you do this intelligently, you will get through this. And this is just temporary, right? A lot of economists, as I've said, are all thinking this is a V economy, which is going down very fast, but they're hoping it's going to go up very quickly. No one really knows the future, so I don't want to get people too excited, but they're all hoping that, right? So some takeaways from this, right? Choose your banker wisely. I don't know how many of you actually have a banker you can talk to on a regular basis. Bankers like David are great to talk to. They're there to support, and they're the ones that guide you a lot of times through these situations, right? Especially on the financial and banking piece. And then prepare for these types of eventualities. I have clients of mine that are prepared for this. So they're either doing okay, because some of them are hit harder than others. And some other ones, actually, one of them is in the process of selling to a multi-billion-dollar company, and he's still doing very well. Another one, as I told you, their sales are skyrocketed. Other ones are trying to survive, but it also depends on the nature and how hard the industry is hit, right? But anyway, so with all of those things, in summary, 1, stay level-headed, keep working, right? Lead. 2, manage profitability, have an action plan to act quickly. 3, focus on your strengths and your key highest margin customers. 4, be ready to decide what you can stop doing, recalibrate your budget. 5, liquidity, right? Cash is king. Manage liquidity as hard as profitability, delay payments, speed up invoicing. And then finally, if you shrink, it's okay. You will get through this. Just be intelligent about how you move forward.
Thank you, Albert. I guess with that being said,
you're on mute.
I'm on mute.
Cherish is on mute.
Oh, but what I was going to say is, if there's any questions, I think Cherish is going to open up the line for questions, or you could also type them on the chat, and we'll be happy to try to answer those for you.
And I know Corey has to jump off because there's going to be a call where she's going to learn additional information. So we're trying to wrap this up by 1. So if you guys have any questions, I know some of them were answered. There is, I saw there that there was an application. There is an updated application. It's out on the best resources based on our conversations prior to this webinar. Go straight to the store. So on the SBA website, and we can send additional links later on, they're continuously updating that information. And so it's best to go straight to that source, because I know that they had made that change from the percentage from 0.5 to 1% yesterday. And so we are in a constant state of flux. And so if you are looking for the latest information, go straight directly to the SBA website, because it will have that updated information. And from that information, then it gets disseminated to, the lawyers, the accountants, and everyone. But that is the best source to go to. Are there any other questions? Let me try to figure out this unmuting. Does anyone have any other questions or? So just if you do want to talk about anything, I'm just unmuting everybody. I think there's probably an easier way to do this, but I'm not that great at technology, although I'm getting better. Anybody? Does anybody have any questions?
I have a question. Hi.
How
This is.
are you?
I'm doing good. How are you doing?
Good, good. Thanks for being on the webinar.
Yes, no, very informative, and definitely want to thank the whole panel for putting this together in such a short time. The question that I have is this: is that like if you are an employer, and let's just assume that you had 10 employees and you apply for a PPP loan, and assuming that you had laid off 5 before you got the loan, and now they have not returned back to work. Question is that does the amount of the loan for those 5 employees that don't return to work, that is unforgivable, right?
I'll try to answer that, Gerald. And maybe Corey, you can help me out here. So, if the employee doesn't return to work, you went through the process of figuring out what your average payroll was for that time frame. Let's say the 12 months, right? And the amount of money that's going to be given to you is going to be based on that average. And so the bill says that your payroll can't go down more than 25%. So in this case, you have 2 options, right? You either go out and try to replace those employees that left, if that's going to put you in a situation, and if those numbers kind of help you stabilize and keep from falling below that 25%, then you're good. If it falls below the 25%, then it's in a sliding scale based on what percentage of your payroll dropped, and that's the amount of money that won't be forgiven.
Okay. So basically it's a sliding scale factor, or if you want to avoid that, then you try to employees so you don't get below the 25% threshold.
Right.
Okay. Appreciate that.
Yeah, and I would just interject or add to that, the PPP program and the EIDL, I mean, they don't always make sense for a business. You have to look at it very closely to see, if it makes sense for you to retain employees. For a lot of restaurants, this may not make sense. And there may be other industries as well, obviously, or other businesses. And then in addition to these programs, there's a big, your employees may do better under unemployment insurance than, they are under being retained by you, depending on what the future looks like, to the best of our guess at this point. There's also tax credits that businesses might be eligible for that might be a better choice or need to be evaluated as to, how much money you're looking at borrowing. So these are big decisions that need to be made in conjunction with your accountant, and unfortunately, none of us have a crystal ball as to what's going to be the best decision down the road. I think they're trying to give us this flexibility here, but those are very good questions that you're raising.
Okay. No, I appreciate that. I know it's still fluid, but just, that question has come up, and, it's just been like one of those, I can't say this is the best path to go or this is not the best path, but it'd be something that they should obviously weigh both options and see which works best for them.
Right.
And I would like to just add, I'm not sure if there's any restaurant owners here or not, but there is a restaurant employee relief fund that has been published, and it is in a form of a grant. So if anyone's interested, I can post that or send that. I don't know how this would be communicated to people, but I've sent it to several of my friends that own restaurants, and apparently they've found it very helpful.
Thank you, Albert. And if there's no other questions, I did want to wrap up by saying thank you to all of my speakers. Going forward, we will be having an update once we get more information and as this situation plays out. So, just we'll send you the information via your email. But one thing to keep in mind is, because of my compliance background, you need to make sure that you are gathering all of the documents you need ahead of time, but also documenting it as you go along. So there might not necessarily be a lot of regs in place or specific things, but you want to make sure you're crossing T's and dotting your I's. And so the purpose of this is to maintain employment and to keep the economy going. And the things that they're asking for up front, it may take a while for them to implement the regs for them, but you need to make sure that you're doing your own due diligence as a small business owner and you're keeping those accounting records. Because if an audit does go through the later on, you need to make sure that you are organizing and detailing all of the records. So thank you everybody for attending. I don't think we have any other questions. Do you guys see any other questions?
Yep.
Okay. Well, thank you. I appreciate everybody being on here. And I know Corey's got to jump off and I've got to jump off as well too. But thank you, thank you, thank you. And we will be having another webinar as this situation evolves. And please feel free to reach out to any of us if you have any additional questions. And we are compiling together just some helpful resources. We want to be a resource for you at this time. For our referral network, for our network, and then also for small business clients. So once we will get this recorded and we'll start distributing it if you know of someone who may want to watch this program. Thank you. Thanks, speakers. I appreciate it.
Thank you.
Cherish.
You as well, everyone. Have a good day.
All right, thanks.
Bye.
Thanks. Bye.